Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 22nd, 2021 episode of Decision Point. My name's Erin Swenlin with DecisionPoint.com, and I'm here with my dad, Carl Swenlin. How are you doing, Dad?
Pretty well.
We're getting ourselves all ready for Thanksgiving, aren't we?
Yes, we are.
Had the big discussion this last weekend to get everything sorted out, but it looks like it'll be a nice day and a good holiday.
Right.
All right, let's get to it. Our agenda today. Carl's going to do the SPY and indicator overview, take a look at our decision point indicators. I'm going to look at the sector CandleGlance. I don't know how many are familiar with it, but I'm going to show you how you can get to it. And then we'll talk a little bit about that. And Dad, I hope you'll add your thoughts on that. I'm going to focus in on utilities. This was the sector to watch last Friday when I was doing my analysis for Decision Point Diamond subscribers. And I thought that it deserves a look on the show. I'm going to also show you how to use the industry group CandleGlance. And one of the reasons I'm going to do that is because one of the industry groups in utilities is on it. And I think it'll be interesting to see how it compares to the rest. And then I will finish. I have two diamonds of the week for you from the utility sector. So we will get right to it. I'm going to show you if I can get we do have a free live trading room. I did that this morning, at least Pacific time, it was the morning. We do it from noon to 1 p.m. Eastern time. It is completely free. Just go ahead and go to our website and sign up for our free newsletter, and you'll get all the information you need so that you can join us. And if you can't join us, I always send out the recording to our newsletter people. So go ahead and sign up for that. Right now, as far as the sector scoreboard goes, we still have pretty much everything on an intermediate term and long-term trend model buy signal. Of course, intermediate term trend model buy is a silver cross. So this means that all of these sectors have silver crosses, a 20-day EMA above the 50-day EMA. The only one odd man out right now is communication services, XLC. Currently, the 20-day EMA is below the 50 on XLC. All of the long-term trend model signals are on buys. That means they all have a golden cross. The 50 is above the 200-day EMA. All right, so let's get to it. I'm going to pass the screen over to you, Dad. And what are you seeing right now?
Okay. Let me get off started with the right chart here. The president is going to nominate Jerome Powell again for the Fed chair, and that gave the market a boost early in the day, but it really just reversed, and that's not such a good sign. We've got higher than normal volume, higher than average volume on that move, and I think that's a concern.
Wow, and to get that kind of total volume on what really is considered a holiday trading week, I don't know, that does seem to be telling us something.
Yeah, that is true. That is true, because we've got really only 2 more trading days before Thanksgiving, and then Friday will be a total throwaway.
Yeah. Yeah. A waste of everybody's time. Why don't they just take it off? Yeah. Take it off.
Yeah, it's a law, unfortunately. Okay. And we've got the VIX hitting the bottom of the channel again. And we consider that to be oversold, but I don't sure that that's going to be the case. Advanced decline lines. Notice going into this, we hit a new all-time high today. Going into that, we've got negative divergences on the advanced decline line and advanced decline volume. Broad market gold cross indexes, they're trending downward with the S&P 500, NASDAQ composite, and the NYSE composite. We have on the golden cross, the opposite of the golden cross is the death cross, very dramatic. And that is when the 50 goes below the 200 EMA. On the intermediate term, with the silver cross index, the opposite of the silver cross is we call it a dark cross, and that's the reciprocal. Right now we have for the NASDAQ, we've got more stocks that are on the dark cross that's DARK than there are on the silver cross. So that's very shaky at the moment. Still, we're about 70% silver crosses on the S&P 500. Got to do this a different way. New highs and new lows. We did hit new highs from expanded compared to Friday, but notice that even though we hit a new all-time high here, they contracted based on these prior peaks. Silver cross index for the S&P 500. We looked at that for the S&P 400. It's actually a little better than the S&P 500. And the silver cross for the S&P 600 small cap is basically the same as the 500. Here's a chart we have in our charts list for subscribers, but was noticing on this, normally in a healthy market on an equal-weighted basis, the equal-weighted index will do better than the cap-weighted SPY. But, and this is a one-year chart, notice that in this move here from this low, it's 25%, 26% for the RSP and 30% for the cap-weighted SPY. So that's really upside down as for what it ought to be. Also in this, taking it from these lows, 18% gains for SPY and only 12% for RSP. So it's slowing down. And notice that RSP is basically pulled back from its all-time high last week. Starting out the week with a red bar. And we've got the weekly PMO is below the signal line and it's flat and could be turning over here quickly if this selling continues. That would be a very negative sign. Climax, we did not get any climax today. Expanded total volume, but it's not backed up by anything else. We haven't got the New York Stock Exchange numbers in, but they don't come in until much later.
Can you scroll up a little bit more? I didn't quite see the down up for the SPY or the S&P. Okay. Yeah. Wow. Really shocking to me.
Right.
I would have expected with this high volume and this kind of crazy move today, moving down from those all-time highs, I would have expected to see a higher volume up, down.
Well, my guess is that people were very excited when it was open and opened up, and then as the things started, running downward, they started running out. But it basically kind of you had an equal upside and downside, pretty much.
Yeah.
bias assessment, this requires a little more thought, which Erin will give us, but I wanted to, when in the DPA publication today, but I wanted to point out how these stocks above 20 EMA, 50 EMA, and an NX 200 EMA, how that, while the market was going higher, these have been running out. So we're showing some weakness there. This could turn into a real disaster, but, or it could maybe not
Maybe.
much at all, but I'm saying this is the kind of thing you don't want to see. Short-term indicators. Again, we've got major divergences here. The PMO's rising. It's down to 30%. This is not updated today yet. Again, this is one that comes much later. But you see this is terrible look based on this rising price. The ITBM and ITVM shows. Right here, you notice again, I'll use another chart to point that out, but notice we've got PMO crossovers. Buy signals is dropping like a rock, and PMO looks like it flattened out today. This is a chart I don't show often, but it's a one-year chart of our primary indicators, and you can see here on the ITBM and ITVM, we've got negative divergence against the rising price. The dollar has been very strong. I think it got a boost today, again, because of Powell. In fact, this could be insider information going on this for some time. I'm not sure when they made up their mind, but I think it was getting pretty obvious who was going to get the nod. Gold did terrible today.
Yes.
But yeah, we had a nice flag formation going. I did express some doubts last week about this was not a rising, it was not a falling flag, which is the best because it shows some compression building up, but it's sort of a flat. What you don't want to see is a rising flag formation. That's kind of more dangerous, let's put it that way. But on the good side, we still have, smiling through our tears, we can see that there's a possibility we've got a saucer here, and then this is possibly a handle on the saucer. So
well, it is holding the 200-day EMA for now, of course.
Right. And perhaps this is the shakeout that will start the next
leg up.
Yep. Crude oil, USO, we've got a falling wedge formation that generally will not, be more often than not, it will resolve to the upside. I think we've got some fundamental churning out there in the commodities, and particularly with oil. But I don't see any other course for it, oil, except to the upside in the longer term. The 20-year Treasury, TLT, we had the rising wedge, it broke down, and now it's snapped back, and not sure which, maybe that's it, snap back, and it's going to continue lower. That would mean interest rates are probably going to go higher. So let's get the 10-year. It was up big time today, almost 6% from Friday. And this is a triangle formation, probably going to resolve the upside because the rising trend is steeper than this declining trend. Would you agree with that?
I absolutely would. And another thing to think about too, when we see symmetrical triangles, is they're considered continuation patterns. So typically it'll resolve to the side of where it was going to begin with. So since this was coming out of a low, I would be looking for a breakout.
Right. Yeah. Basically, it's been in an uptrend since the summer.
Mm-hmm.
And one more to look at here. I want to see Bitcoin. We had a big rounded top over here. I've taken that off because it's sliding off to the left. But we had one here, and that resolved to the upside. Now we got another rounded top. So, and it's not holding up that well over this. In fact, it's gone below the support twice, 3 times, and today did not get back above. I did have sorry, I've got something in the way here. I wanted to look at communications.
Yes, since it is the only one with that.
Right, that it's still on a intermediate term neutral signal, a soft sell. But, we were looking at this saucer formation, and boy, it just didn't want to do anything with it, and it broke down last week, and it's going lower now. So that doesn't look at this point, it doesn't look like it's coming around as we might have hoped. And with that, I will pass it back to you, Erin.
All right, indeed. Yeah, I was looking at XLC. I thought we were on the right path. Participation had started to improve a couple weeks ago, and yeah, it just petered out. Just didn't do anything for us.
You got a PMO sell signal too on that notice.
Oh, yes. Not good. All right, so we now have my screen. So I'm going to show you how you can get to a sector CandleGlance. And it's quite easy, and it's so helpful. I find that I'm using this daily, often. So if you click on the sector summary, you saw where I clicked right here. If you click on that, it's going to bring up just the list of the sectors. But underneath, you can choose to do an RRG, you can do perf chart. I'm going to show you the sector CandleGlance. And so we get all of them on the same page. Now, yours may not look like this because I have a special CandleGlance setting, chart style. You can do the exact same thing. In fact, I'll show you over here. So when you set it up the way you want, just go over here to chart styles and notice that I have one named CandleGlance. That's because I already have one. But if you don't, add new, make sure you name it CandleGlance, and then you're going to always see your chart style here. If you want my sector CandleGlance, I can send that to you. Just send me an email at Erin@DecisionPoint.com, and I can share that CandleGlance style with you, but it will only work for StockCharts members. So you can't change your CandleGlance unless you're a member. But notice the PMO on all of these sectors. I really struggled on Friday to figure out what sector we should be watching going into this week, because we had XLK doing quite well, but starting to get a little bit toppy as far as the PMO goes. XLY has been in a great move here, and it pulled back, and we started to see it turn back up, but it's now gotten really overbought. So it wasn't really the sector that I was going to be fishing through this week in particular. But utilities had kind of an interesting look to it. Granted, it's a flat PMO, but let's go ahead and I'm going to bring up that chart so we can focus in on it just a little bit more. And I'm going to use our sector charts. These are all available to our subscribers. And we're going to look at utilities. And there we are. So utilities, like I said, been moving mostly sideways. We weren't seeing too much out of it, but I was looking at this as maybe a sort of a cup with handle, and I was seeing the breakout that was at least attempting to occur. But the main thing that I liked about it better than the others was that the silver cross, and I believe it was actually falling on Friday, I will tell you that, but we had a rising trend as far as participation. Whereas when you look at technology and consumer discretionary, we didn't have that look. We had participation starting to fade, and participation numbers were lower than the Silver Cross Index percentage. So that's not a setup that I'm looking for. I want to see better participation. And if we look at consumer discretionary, a similar look, I saw a topping SCI, and look at the participation numbers in XLY. We are seeing XLY breaking out and doing well, but clearly it's on a certain percentage of stocks, and we're starting to lose, they're starting to fade. We're losing more participation of stocks above their 20 and 50 on XLY. So now you've seen both of those. We'll go right back to XLU. And again, two bottoms above the signal line. I like to see that. And again, notice the participation, the Silver Cross was in the 40s, and participation angling up and above, well above the Silver Cross Index. So to me, that was the index, the sector to watch this week. And we did end up seeing a nice little move on it. Of course, energy and financials, I believe, had a much better day. But I think utilities are not a bad place to start looking. I've been telling all of my subscribers, I'm not going to increase my exposure to the market right now with things looking as, Carl showed you all of those charts. There's a very high likelihood we're going to start seeing prices move lower, at least enough that it damages my confidence level on expanding my exposure. So I do suggest that you consider carefully if you're going to expand your exposure. But this is an area, utilities, that I think will be somewhat resilient. It is a defensive area of the market. And again, participation is starting to angle up, not down. So I think that utilities are looking pretty good. But I'm going to take you back to our dashboard, because the other thing I wanted to show you today was the industry group CandleGlance. So I have a scooter reports section on my dashboard, which you can get to. You can change it to whatever you want. In fact, we have DP signals like I have right up here. And so we can look at the industry groups that have a high StockCharts rank. They are, these are the ones that have moved up the most today. These industry groups. So what I do is I just come down here and I hit CandleGlance. And again, I get all of these industry groups that had the best moves today. And I get to look at them all with my PMO blinders on, if you will. I can see what's going on based on what we're seeing here. What's funny is that when I did this earlier, the water index was on here, and it is not on here anymore, but it was the only one of the sectors or the industry groups that were showing a rising momentum, and not, you can see these are all pretty much in decline. They may have had a good day today, but overall the momentum is not moving in their direction. So let's go ahead. I'm going to come back here and we will go to the sector summary again. And in this case, I'm going to click on utilities rather than the CandleGlance. And now I have all of the industry groups on one page. So the water index had a really, it was moving as far as the scooter was concerned, but now it isn't. So we'll look at it here, but you can see that when you compare what I was looking at with those industry groups to this one, this was the only one where you were seeing a positive looking PMO. And I think on the water index, we're seeing that right now. You can see positive RSI, stochastics are rising. One of the stocks that I had on my list for DecisionPoint Diamond subscribers about a week ago, 2 weeks ago, was American Water Works. And you can see that it's doing what it's supposed to. We don't have the breakout yet, but certainly on the right path. We were seeing the improvement in stochastics and the PMO. So that's why I called it out to my subscribers. And I think that one's doing pretty well. But we have about 3 minutes. So I'm going to show you my diamonds of the week. and they are from the utilities sector. So the first one is American Electric Power. It had a pretty good day today, up over 1%, but you can look at how this chart is really shaping up. You've got stochastics rising and are now in positive territory above that net neutral 50. The PMO looks great coming down, had a whipsaw here back into a buy signal. And you can see the RSI is positive here. We have not broken above overhead resistance. That's going to be the next trick for it to do. But you can see that against the industry group itself, it's doing quite well. And we're seeing, even with that industry group, a rising trend on relative strength. So it's starting to see some improvement as well. So this was one that came up in my momentum sleepers scan. And this one, oh, I just did I want AGR, Avangrid. This one came up in my Diamond PMO scan. So this one, I really like the setup on this one as well. And multi-utilities, RSI just moved into positive territory. You can see stochastics are rising nicely. And again, if you're going to see an industry group that maybe is starting to do well or is doing well, it's good to compare the symbol to the industry group. That way, you know you're getting a leader within that group. And certainly Avangrid is. You can see that relative strength-wise, it is outperforming its industry group. And it is starting to trend upward in relative strength as far as going against the SPY as well. So I like both of these as diamonds of the week. And we do have a few more minutes left, at least one more. Any other parting thoughts that you might have for our listeners and viewers?
You put up the CandleGlance again?
Absolutely. So we'll go dashboard, sector summary, sector CandleGlance. There we
I
are.
just wanted to point out look at S&P 500, XLY, and technology. Those are the only ones I'm seeing that you had a very good, strong upside and then a reversal to the downside.
Yep, absolutely. And, that's where, we've been looking for strength and stocks, but now that they're both really overbought. And so I am a little bit hesitant on those for sure. But yes, they're the only ones really showing anything good. That's all we have for today's Decision Point show. We thank you for joining us. Definitely stay tuned. Next week, we are going to be unveiling our Cyber Monday special on our next show. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.